Good morning, traders. Good morning. I hope everyone is ready for today. You had a reasonable Thursday evening, and it's Friday, which is always a good thing, right? We got the numbers out of the way, nothing major. Market's a little bit on the quiet side as far as the indices are concerned. So let's take a look here. We'll come back to the gold in the crude 5 minute. And let's just take a look at the ES and this MP chart, which is always fun to really take a step back look, right? Let me get my drawing tools here. All right. Okay, so very interesting. The market keeps on trying to, you know, catch a really nice rally. We came out of this sideways distribution last week, went up, and on Monday made a high, came back down on Tuesday, right back to the starting point to basically, so when the market breaks out of a, like just kind of a price overlap, and we're talking, new contract highs were made on this Monday. The first thing we do is come back and go, is this a good rally? They come back to the starting point, and then we do a little price overlap and we start this whole process again, right? So we made a higher high. The only thing that I can say about this that was very clear yesterday when we looked at this, we had a nice day. I think we had like 7 out of 10 trades were winners, and only one was a scratch. So we had a good day, but trying to look at what the Europe session did and Asia session for me is always enlightening when I come in during the morning session to see how they treated the market, right? So you could see the pre-market here. This pre-market went up here, made a high, and then of course when we opened, this was the U.S. market. This was for me, a bull trap because we opened, we couldn't get up, make a higher high, which was the all-time high. And of course, then the market does this back to, um, the midpoint of this whole day. If you look at it this way, hang on a second. Let me clear this now for a second. And so if you look at this from here, and you take the middle of this, where do we come into? It was right back to the middle of this whole rally. And this is the high volume node, as you can see. Now, see what Asia did. Asia did come back down a little bit, but they really only spent a little time down here and came back to this point until Europe opened up. And then we had this rally, right? So market is holding up pretty well. Let's face it, we broke out to the upside, and there is a basic leg that we started, and we already rallied 200 points up from that leg. And it's very possible we're going for 6,000. No doubt the market's acting well. And you can see that even if you're looking on a daily chart. Let's just take a look at the dailies for a second here. And you look at it this way, we're forging this kind of like trend to the upside. And of course, just so you realize, these green bars are not just up bars, because this one was a down bar, but it's the PAV reversal deal here. We're in this rally and we have not had a sell signal yet. Just like here, we didn't have a sell signal until this area. Now, if I didn't draw enough arrows there to confuse you. But there's a couple of things that I look at, of course, and this is the 30 high moving average and the 30 low. Once we got this buy here, we have not even gotten below the 30 high moving average, showing extreme strength to the upside. And we're in a little bit of a wedge, making new contract highs. So can't deny it. That's why these, you don't get instant gratification when you do short the market. It's really a hard love, right? Trying to short the market in a bull, like in a bull trend, right? So let's open this up for a second. Spending a little bit more time just because it is such a unique time that we're in, making new contract highs here. You got gold making new contract highs. The indices are all looking pretty good. Dow's continuing to move higher. So you can't fade it, but you can see here, once you have this failure, in the first hour, we put in almost the entire range, and then we went back up into the single prints, the first 30-minute tail, kept on stalling out right here, which was a pretty big level. And you can see we put in a little bit of volume there as well. This is a high volume node, and it's only 3 days worth. So you could see that was pretty important. And this is definitely going to be important today. That's where my pivot is. So 59.09 to 10, I think we get above this area. Then we do a full retest of this area, which is pretty. The reason why this is a red zone for me is we had a bull trap, previous high here. It's a tail, which it's really hard to get into these tails. And of course, the overnight, right, the all-time high was made during the Europe session, the overnight session, which is usually a big fade if we open and we can't take it out. So just a little review of what we did yesterday and what the market's looking like. I think now we might get a push up to the pivot in the morning. If they fail, then we go to the dark side and maybe we get back down and test this 83, 84, which is a big area. Okay. And that's where the overnight set or the US session ended up testing, was this high volume node. So, and that is the point of control from Asia and also the low of Europe. So we get below this, then all bets are off. We can get a nice push down. Meanwhile, as we're speaking, you could see over here just keeping my eyes on this, the crude and the gold. We'll get that. This is the crude and this is the gold. We'll get to that in a minute. Let's go to the next chart here. And speaking of the crude, this crude is in a holding pattern for me. We have 3 days going on 4 days of price overlap. And it's a little on the heavy side because this gap here that we put in here from this sell-off, and then we have a gap from what looks was Monday's low to Tuesday's high, and have not been able to get back into the gap. And for the most part, we have this big price overlap, and that's why you see it shaded blue. So for me, above 71.20 to 25, we catch a rally, and below 69.44, you get some follow through to the downside. Until then, I'm using that as like one big pivotal area. You can't really have a pivot in a tight coil like this. For me, whichever way we go, we could catch some direction and get a directional move. So we take out 39.30 or 69.35. We're probably gonna make a good play down to around that 68.15 high volume node, test the inside pocket at 68.72. And on the upside, we would really have to, for me, I think the downside's bigger attraction. I think we'll get a better move if we take out the lows. We do take out the highs. We need some conviction to go into the gap in this crude. So 71.20-ish, 69.35, the over under. All right. And I'm sure we'll catch a couple moves. But until then, yesterday, what do we do? Pocket to pocket. We made some nice, some nice moves, right? You can still play inside a coil, but you have to change your thinking. You have to sell rallies by dips. Don't look for a trend until you have confirmation coming out of a coil. Now, speaking of that, that's what we did here with the gold. We had a lot of price overlap. They tested below it, put in a low, came back into it. But once we took out the top of this kind of price overlap where we balanced before, came back to try to balance inside, but came out of it nicely, and we're starting this trend, making new contract highs and forging possibly to 27.48 to 50 is a possible move, or I should say target. That would be the top kind of this whole channel that we've got going. And it was a fairly reasonable kind of flag here. This was a bull flag. We just came back down, and we really didn't do too much damage. You could say the slope on the 20-minute, the 30 high moving average held, the 20 EMA held, kept sloping higher along with the 5. So everything looked really good anyway for me. I was bullish to gold from a while back, if you remember the yearly charts I put up, right? Now it's back at 23.90. So we're $400 higher. So do like the gold. Lately, it has been a good performer to the upside. All right. All right, let's look at this chart here now. My pivot is right around this point of control. As you can see, it turns out it's the point of control from today as well. It was the point of control from the overnight market, 27.25. So now that we test it up, the gold will probably come back down and test down to this, which it does very often come back and just fill the gap quickly. The gold seems to fill the gap quicker than most other markets. They open up higher, they get everybody happy, and then they spank them. And so 27.12 would be probably a solid move down, because from the overnight market, you could see here we had the ledge, right? This is yesterday's high, and this is a cave. So we have single prints that I think we can come back down to and do some structural damage, right? Yeah, or repair work, not where we were damaged, right? But still looking good for the most part. If we take out and we get back below the gap, this point of control from yesterday from the U.S. session is pretty important, because it was the old contract high that we made prior to this yesterday of 27.0870. So you can see that's the point of control right below there. So 27.0640 to 50 would be a area to watch if we started a break, and almost a place to buy a dip if we get down there. But we'll watch it one data point at a time, right? All right, let's take a look at this, the EC. Now, the EC has been in this downtrend for quite a while. In fact, it's very interesting just to look at how it looks here on this daily, right? We have not had one PAV reversal since we made this high over here back on the end of September. So it's been in a down move, staying below the 5 daily SMA, right? Hang on a second. Here's the, I should say over here is the 5 daily SMA. can't even seem to close above it, where the bonds did, what we didn't here on the EC. But this might hold up. We just came back down to a previous swing low, and today you might get a pop going into the end of the day, and maybe we get up to this 109.35. We'll take a look at the market profile, but for sure five the daily 5 SMA will probably get traded above today. But you can't really get too you can't get bullish, right? You can look for a little short covering rally. In order to get, have this market reverse, you really need some, work to be done like we did here. That's when we put in those lows. We did a lot of sideways price overlap, and then we finally started to come out of it, right? And then you turn the slope higher, and you've got all these other reasons to continue to the upside, PAV buy, all the way up until when you get a sell, right? All right, so let's go back to this market profile, and you could just see higher lows or low, lower highs and lower lows, all the way down, right? So we're on this push down, but today, look what we're doing, where this could be a short-term bottom just because we're filling out these single prints. We came down too fast. This was almost like a climax low for me. You've got the point of control on the low, so really did a little shakeout. So my pivot is at 108.48. I think that 108.40, 108.48, 47, that area close to the overnight lows. It's important. If they get back below this POC, that would be a big failure. Now we have no gap and just filled in the cave, and there's a good chance that we're going to do a full retest of yesterday's U.S. session highs, which comes in right around 109-ish. We'll see, but don't get too bullish. It's not really a reversal yet. Just looking at the levels and the price action looks like we might catch a little bit more of a lift. All right, call me crazy, but don't bump. All right, let's take a look at this the bonds. And Kyle had a great call with the bonds yesterday, watching the 5 daily SMA. We had close above it, which the first close above it pushed, you get a push back down, test these. We came back and tested the low, could not take it out and test that overnight low from yesterday overnight on the opening, and that was the test down. So very interesting. You can see it better probably even on this daily bar chart. So let's take a quick gander. Here's the yellow is the 200-day moving average. So we had the first close above the 5-minute SMA, and then we push back down to do one more test of the lows here. Now, this was a big area before. We had this inside pocket. If I drag this over, underneath here, good support. So that might be a good bottom for now in the bonds. And I think you could get a bit of a push up in the next couple of days. We'll see. We did get a test there, and you need some structural price overlap before you can call it a short-term bottom. But fundamentally, of course, the market sold off because I think it got a little bit over the top on the rally, so we had too much of an upside here. And if you were to just take the high and the low here, we had equal swings to the downside for the most part. So we might just get this little bit of correction. All right. We'll see. All right. With that being said, let's go back to the main page. I'll bring up the NAS and the SPOOs. And let's bring up these volume candles. You can see what we just did here. We were looking for a test down. We got right down on at 69.35 on this. We were looking at the bottom of this big price overlap, and we just did a quick test and right back up. So that was the swing low from yesterday, the US session low. So we're still back, kind of testing around here in this area where we keep on testing and coming back. You see the white, that's low volume. So, okay, with that being said, I've been taking up too much time this morning. Let's just get ready for the opening. All right. And we'll just let the market open up and show its hand for the first 15 minutes.